You ready? Yeah, you got me running, you got me running, got me running. Shake it, shake it, shake it, baby. Raise your hands up, raise them up.
Hello, everyone, and welcome to Tuesday's episode of the Daily Currency Call presented by LCMS Traders. Thank you for joining us, to everyone that is watching this live as well with the LCMS Traders Club. And make sure, if you do want to catch the call live, to actually ask questions live whilst we're doing the call, to visit the Jindal Thai website and get subscribed. We are taking on new traders as well. So it is Tuesday. We've got a little bit to go over as well. We've got the Euro pairs, Euro pound to go through. I'm going through the DXY. There has been a little bit going on in markets as well, with a lot of uncertainty still around with the Ukraine-Russia situation. If you didn't get a chance already in the trading floor chat within the LCMS Traders Club, you make sure you check out what was posted by Jin about the Ukraine developments and why it is an appealing situation for Russia and what Ukraine is actually good at doing. And they're actually quite a valuable country, it looks like, as well from a resource perspective. But before we get into everything and we go through some trade ideas like we do every session, we do have a risk disclaimer, and I will read this out. So any information shared in this video is not intended to be a trade recommendation. It is solely the opinion and views of the speakers. So please remember to do your own analysis prior to entering any trades. Now, to get us kicked off here, we do have Kim Hong, currency strategist with LCMS Traders, just going through the FOMC member Bullard's speech last night. Well, it was last night for us in this GMT plus 8 time zone, and he'll just go through the details of what Bullard had to say. So I'll pass it over to you now, Gimme.
All right. Thank you, Scott. Okay. Wow, what a Monday we had. I mean, like normally, on Mondays, we tend to see a bit of a slow market moving kind of action. Okay. But yesterday was I would say it was quite a bit of move. Okay. Wow. Starting off with the political escalation of the political tension between Russia and Ukraine. Okay. So I think Joe Biden actually mentioned that, he felt that, it may actually, Russia may actually invade Ukraine. And then yesterday, I think, US actually, recommends its citizens, okay, living in Ukraine to actually evacuate. Okay, so there was like some evacuation taking place and things like that, leading to a continuation of the risk off sentiment in the markets. Okay, hence like yesterday during the afternoon session, from morning onwards, I would say, okay, from the morning session until the European session, okay, in the afternoon, GMT plus 8, there was actually a strong sell-off, okay, in risky assets, risky currencies, risky instruments. Currency-wise, okay, we see the Japanese yen, the US dollar, and the Switzerland franc strengthen against the other currencies, the other major currencies, okay? And then comes like probably around like, I think it was in the evening, okay, around 8 or 8 something GMT plus 8, okay? Russia's foreign minister, okay, actually came out to say that, we can actually, he actually said something like, we can actually discuss about this whole issue as a way out, if we don't want to further escalate this whole geopolitical tensions and things like that, okay? So that in a way sends a bit of a sense of relief, okay, into the market, all right? Hence leading to, I would say the sentiment, okay, became better, okay, because of this whole, because of his, because of what he announced, right? Because as long as, we can actually avoid this whole invasion from taking place, or even a war from taking place, then the sentiment will get better. So there was actually a strong sell-off initially for yesterday, and then there was actually a buyback. So in the end, I think it wasn't really the day actually concluded with like I would say a break-even kind of a situation in the market, at least for the currencies. Okay, like the pound dollar, euro dollar, and things like that. There was actually a strong recovery after that. Okay, and then later on in the night, we actually heard from James Bullard. Okay, he was actually having an interview with, I think, CNBC. Okay, so I think last Friday or something, right? He mentioned something like he expects 100 basis points, okay, which is 1% of interest rates hike by 1st of July. Okay, so let's just think about this for a second. Okay, from now until 1st of July, okay, how many more meetings will the Fed be having? Okay, the next meeting will be in March, followed by May, and then June. Okay, so June will be the last meeting before 1st of July, right? So from now until then, it will be 3 meetings. And James Bullard is expecting a 1% rate hike. Okay, so what this means is that one of the 3 meetings, okay, will likely see a 0.5% rate hike. Okay, now my take is this. Okay, March may very well be the meeting, okay, the monetary policy meeting that we can see we can potentially, okay, see a 0.5% rate hike coming in from the Federal Reserve. Okay, so yeah, yesterday he was during the interview with CNBC, he actually mentioned that, based on the previous inflation reports, like 3 or 4 inflation reports, okay, he felt that, inflation in the US is broadening, okay, and possibly accelerating, okay, accelerating further. Right now, I think it's around 7 point on headline inflation, okay, on an annual basis, around 7%, okay, which is like I mentioned the other time, 1 month short of the 40-year high level, okay. And if Bullard is correct, okay, and if inflation is going to continue accelerating, then yeah, it's going to go even way higher. You may even see an 8% coming in the next 2 or 3 months or so, okay, which is why James Bullard, he actually felt that it is necessary to hike rates more aggressively, okay, not only just more frequently, but more aggressively, okay. I mean, as frequent as they would like to hike interest rates, okay, it really has to be done during monetary policy meetings, okay, in case, to avoid any knee-jerk reaction and things like that, okay. So what they can do, apart from carrying out more frequent hikes, is to carry out a more than 0.25% kind of hike, okay, which is equivalent to, well, if they were to actually carry out 0.5% hike, then that will pretty much be equivalent to 2 hikes, all right? So another point that Bullard actually carry out, okay, that I actually mentioned, okay, is that he said that he will try to convince his colleagues, okay, which is the other FOMC members, that, this whole 1% hike in interest rates before 1st of July is actually something that's going to help bring down the inflation effectively, okay? And it's actually a good plan. So he decides to, just try to convince the other members as well, the other junior members, okay? James Bullard, I would say he's quite a senior member, okay, within all the committee members, okay, other than Paul, of course, and Brainard was the vice chair of the FOMC, okay? So in a scenario, okay, whereby we, if Bullard managed to convince the other members that, this whole plan, this whole position, this whole view is actually a good one and will help in bringing down inflation in the US, okay, then we may very well be seeing a 0.5% hike in March, okay? That will definitely be very hawkish from the Federal Reserve, okay? And the meeting minutes, okay, for the most recent meeting will be released on Thursday, okay? And I'll probably talk a bit more about it tomorrow during the currency call. All right. So for now, do we have any questions on Bullard's meeting? It's pretty straightforward, I would say. Okay. So no questions for now. Then, okay, great. Then I'll hand it over to Scott for his analysis on DXY. Over to you, Scott.
All right, thanks, Gimme. And well, we've got some upward movement now on the US dollar as well. We're back over 96. We do have continued concerns. Really, the main theme I've been taking away from the market is this Russia-Ukraine situation. It's very much unresolved, and the Russian troops are still very close to the border as well, running their drills, which obviously do concern Ukraine and the rest of the world as well. So we are seeing oil get a lift. We're seeing the US dollar get a lift as well. Small pullback currently, if I'm go to the hourly from an intraday perspective, and we can see that we tested the highs around 96.40. We are just easing back down again whilst we're in the Asian trading session. So 96 has proven to be a point of support. So I'd prefer to sort of see it just trickle down even lower. And from a news perspective as well, we don't have a lot of news out later today from the US. And I'll just quickly go to the calendar now and we'll just have a look. So really, as you can see, this is for Tuesday, and that is it. So we obviously had Bullard speaking last night, and that's being discussed. That was discussed with Gimme. So it's pretty light on, and really what we're seeing is the equity markets and also the bond markets are getting quite interesting. And I quickly want to just go to that as well, and just to touch base. So as you can see, when the news is a bit down like this for catalysts, I do like to see what's going on with the bond yields. And this is particularly important as well, because what we are seeing is that there are heightened concerns with the interest rate rise and when it will happen. So this is the 1 month now, and I'll zoom out and you can see the significance. If we go to even the year to date, we can see, we zoom out there, it's very extended. It got to 1.5890. We are easing back a little bit, but the dips have been bought into pretty frequently. So as we get closer and closer to March, and we're around a month away until the Fed meets and the decision is made, I think it's really going to be, they can't avoid dealing with this now. And that's going to be a nice catalyst to see how the market reacts. So I'm for bigger positions, I'm still keeping risk light as well, and it is chopping around, but it looks like the markets are continuing to sort of have a bit of concern until a decision's made. So that's what I'm really waiting on. And long buy still on the US dollar as it holds above 96. 96 would be a nice little dip buy if it does creep down there lower before the US session opens, and then we might see what risk sentiment does. But very sort of short-term focus still is how I'm approaching it, because we've got a lot going on that's still not resolved. But we do have the euro, and we've got the euro pound as well in focus with Jin. So I will hand it over to you now, Jin.
Thanks for that, Scotty. And thanks, Gimme, with the analysis for the US dollar and also the geopolitical tensions that we're facing right now. So yesterday, as Kim Hong was just sharing with you, has been quite an interesting trading session. What we're actually looking at here is the euro dollar and the euro pound, but looking at the news first. What we actually have for today is quite a lot of news. We do have the UK earnings employment numbers to be released. We do have the euro economic sentiment to be released as well for today, looking at a slight uptick in terms of economic sentiment coming from the Eurozone, and especially in Germany. Following on from that, what we do have tomorrow is the pound CPI number. Why I'm telling you about this is this could influence the way the euro pound will move, but we'll tell you more about the CPI numbers tomorrow. And following on from that, US retail sales number, again, like I was telling you yesterday, looking to move from that -1.9 to a 2.1%, a -2.3 to a 1% for the core retail sales. And on Thursday, FOMC meeting minutes, we get a little bit more insight into what their plans might be for the interest rates decision moving forward. I think this could have some impact onto the US dollar. And then following on from that, not a lot of big news. from that point on. So what this all means is, I actually like what Scott was just sharing with you in terms of the dollar index, looking at the dollar possibly testing that 96 level again before possibly bouncing back up. I think that's a good support level that needs to be tested. So what I think could happen here for the euro dollar on the H4 time frame is that we might see that move back up to test that 1.14 level. It is at 1.1318, so it's quite a big move to be expecting it to test that level. I don't think you'll go all the way there. I think what we'll see is it'll come close to about that 1.1350, maybe that 1.1350 level before turning back down again. So what you should be looking for, in the longer term, would be that selling opportunity on the euro dollar if it does test and reject that 1.1350 resistance level. So a bit of a in the middle kind of trade, right? It's sitting right in the middle of that support and resistance level at this point. What I think would happen is we will see it bounce back up. We'll see it move towards that 1.1350, look for that rejection, and then look to sell it back down. At this point, what you could be looking for is quite a tight stop loss of about 20 pips, about 20 pips stop loss, maybe even a 20 to 30 pip stop loss for a take profit of the recent low points at about that 60 to 70 pip take profit level. You'll be looking at a 1:2 risk reward ratio, or above 1:2 risk reward ratio towards the downside, but this will require you to wait for it to move up and test lower. Alternatively, what could happen is later into the session, maybe the news comes out that they're not going to de-escalate. They're going to, rumors might come out that they might the invasion might happen, or the Russian forces have increased again. Then we could see it turn straight down. You could also be looking for selling opportunities below that 1.13 level. So you could be looking to sell below 1.13 to test that 1.12 level. So there could be another trade idea where you're looking to sell. I know it's getting a little bit messy, but you could be looking at a 30 pip stop loss for a 60, 70 pip take profit level towards the downside for the euro dollar as well, to sell it down towards that 1.12 support level. This would be almost a 1:3 risk reward ratio towards the downside. So no matter what, I'm still looking to sell the euro dollar down, either for it to bounce back up and sell down, or for it to break below that 1.13 and sell it down. With that said about the euro dollar, looking at that downside, what we could be looking for here on a euro pound, we shared about the euro pound breaking that support for that selling opportunity. There was one trade we shared last week. Again, what I think could happen here is for it to bounce back up before selling back down. But with the pound CPI numbers to be released tomorrow, what I would say is be a little bit more careful there. You could be looking to sell it down. Same like the euro dollar, looking to sell it down from below 8350, below 8350. You could be looking to sell down 20 pip stop loss, 40 pip take profit level towards the recent low point, a 1:2 risk reward ratio. But I think that if you're going to be deciding between selling the euro dollar or selling the euro pound, I would go for the euro dollar first. Maybe look at the euro pound later into the session or into tomorrow, once we get a bit more clarity, once we get a bit more idea about how the pound dollar might be moving because of the CPI. And then remember, all this should be kept relatively short term. A lot of uncertainty in the markets right now with the Russia and Ukraine scenarios, and also with the timeline and projections of how interest rates could be rising for the US dollar. So a couple of trade opportunities to be had over the next couple of days, but these should all be kept relatively short term because of all the uncertainty in the markets right now. With that, I'll pass it back to you, Scotty.
All right, thanks for that, Jin. And just remember, guys, if you did miss some of the episode or you're looking to review it, we do share the uploads straight away once they've been uploaded to the LCMS Traders Club as well. Happy to take any questions as well to club members if they do come to you during the trading session once this is stopped recording, and hope to see everyone tonight as well. We've got the Tuesday evening call from 8 p.m. GMT plus 8. Nice way just to check in on the markets and see what is going on with obviously the continued unsettled situation globally. So make sure you catch that, and hope to see everyone tomorrow for the pound analysis. Bye for now and have a great rest of your day, everyone.